by the end of the video, you are going to be able to start trading. So this is going to be a complete beginner's guide to forex trading. Well, I guess you either have an idea about trading or you are just new to this. So I'm going to go ahead and start off with the basics of trading, and then later on I shall show you how you can actually open up a trade, close off a trade, what exactly to consider, and generally be able to make money trading forex. A quick one, at the end of the video I'm going to be doing a giveaway, so be sure you stick around. Perhaps you could be the winner. Without any further ado, let's dive straight into it. So generally, trading is the exchange of currencies. We generally make money by buying and selling. So when you are buying, more often someone out there is selling, meaning that two transactions at a go. And for you to trade, well, you need your phone or your computer, and that's all, with a clear internet connection. So on your phone, you are going to install trading platforms. That can be MT4 or MT5. But well, currently MT5 is the best one because it's way easier to use and with more features. So just go ahead to your app store and search out for MT5, okay, or MetaTrader 5. Well, I have it installed, so I'll just go ahead and click open and we would have the app launched. So that's how it should look like. Now, once you have MT5, you're literally good to go. But now in between there, we have what we call a trading broker. A trading broker is an intermediate between you, the trader, and the financial markets. Now that means once you have the broker in between, you can actually be able to access the financial markets. Now, some brokers do have an interface where you can actually even analyze, check out the charts. Away from depositing and withdrawing, you can actually even be able to trade on the broker's interface. But it's a bit tricky, and that's where TradingView comes in. So tradingview.com is a site for every trader. It's actually free and anyone can actually access it. So I'm going to go ahead and show you. So go ahead and type in tradingview.com, and here we go. Now right over here you can see I have an account signed in already, but you can actually go ahead and sign in. It's free. And once you have it signed in, you could just come over here to products and then come to super chats, and that's where the charts show up. And this is how it generally does look like. So over here you have the charts, and that's where you can do all your analysis. Now there's something quick. So once you have it installed, it's going to come in the default view, and it's up to you to decide and change. Now in this particular example, I have my settings this way. So I do have blue candlesticks and then kind of gray candlesticks. Now in this example, we have the blue ones representing buyers or a bullish movement, and then we also have gray ones representing sellers. Well, another way it could look this way. Let me just go ahead and show you exactly. So more often, once you have the platform installed, this is how it's going to look by default. So in this example, the green candlesticks represent the price going up, and then the red candlesticks represents the price going down. So more often enough, once you have the green candlesticks, we shall be looking out for buying opportunities, and once we have the red candlesticks, then we shall be looking out for selling opportunities. But that's more of technical analysis. So right in over here, you can decide to make as many changes as you want. So just go ahead and right click, and then you'd have color themes. So right here you can make any changes, or come over to settings and come over to symbols. So for the body, I could say, well, I want it say blue, just like the settings that I had. And then the ones going down bearish, I could go ahead and make them gray. Okay, then borders, I could still make them blue, then gray. Then the wicks, same color, and oops, and that way. All right, so you can see I now have a complete different look now, and I can also go ahead and just make it white. I would prefer white, and there we go. Over on TradingView, you can analyze all the pairs. So just come over here. So we have a watch list, details, and news. So click over there, and we have a bunch of currency pairs. So in this example, you can see we have GBPSD, Euro USD, Euro JPY, AUD JPY, and many more. So in here, say we want to analyze AUD JPY, I'm just going to come over, double click on it, and there we go. So I had this trade, took a loss, so I'll just go ahead and delete that. So in over here, you can see I now have the whole chart of AUD JPY right in front of my eyes. And you should be wondering, so can we be able to link TradingView with a broker? And that's where it comes in. So TradingView being a platform of itself, it does allow some brokers and then some others actually not allowed. So to myself, the broker that I use personally, it's not accepted on TradingView, but I can actually link it to MT5. So in an instance where the broker isn't linked to TradingView, you can only use TradingView for your analysis and then come over to MT5 for taking trades. Okay, now if you want to learn more about trading and making money online, be sure you subscribe, and if you are enjoying this video, you can also smash the like button, and let's get back straight into the video. So well, just in here, if I wanted to illustrate something, say I have analyzed and I want to take a sell, just going to go ahead and drag this tool. It's a short position, meaning I'm going short or selling, and bring it over to where I want to enter my trade off from, and there we go. So that means I would have the section up representing my stop loss area or what I'm risking, and then the section down my take profit area, right? Then we also have something in between here, as you guys can see. So it's called risk to reward. Okay, so you can see that risk to reward. Now in this case, it's 1. Now that means I'm risking 1 to make 2. So that's called risk management. Furthermore, if I extended my take profit, you can see that now my take profit, my risk to reward ratio increases. Now that means in this case, I have 2.25. That means I'm risking 1, right, to make 2.25. So generally that's the idea. So TradingView is a very great platform that every trader must actually learn how to use, and you can actually master it by practicing way more. So just come over here, choose any pairs that you want to trade or that you want to analyze, and you would be good. So once you have analyzed, it's time to take your trade. Now, like I said, on taking trades, you are going to use MT5, or sometimes you could have to use, say, your broker, but I would recommend MT5 because it's way easier to use and easy to control. So in this case, you just come over to your MT5 and open up a trade. But as a beginner trader, before you start trading, you must practice as much as possible. And that's why we have a demo account and a real account. So a demo account is more of a simulated account, or just a practice account. You are generally doing all your practice on this account. Now in this example, we can just go ahead and show you. Once you install MT5, it's going to come over with a default account. So let me go ahead and redo that again real quick. So I'm just going to go ahead and uninstall MT5, and I'll come over to my app store, click MT5 and then install. And so here we go. So it says open up a demo account. So a demo account, you agree to the terms and conditions and stuff. So a demo account is just going to be practicing throughout. You don't lose anything. It's virtual money. It's just you practicing. And we can see once you come over to open up account, it's going to say opening a MetaQuote account. And this is how it looks. Now, the funny part is a demo account looks exactly just like a real account. Same pairs, same trades, and everything literally the same. The difference is a demo account has a flag here. So it does have a green flag saying, well, this is a demo or a demonstration account. So right in over here, you can decide to take as many trades as you can. So I'm just going to go ahead and show you how you could take your first trade. So once we have MT5 open and we have a demo account in, you shall go ahead and click this section. So we do have this red and blue button at the extreme right corner. So I'm just going to go ahead and click on that. So we have an option of sell and buy. Remember, major concept, we sell when the price is going down and buy when the price is going up. And by the way, once you're done with this video, you can go ahead and watch a detailed video of my trading strategy, and I'm going to put the link just down in the description below. So right over here, you can see we have sell and buy. So in this particular example, I'm just going to go ahead and say I would go ahead and take a sell before analyzing. This is for practice. So let me go ahead and click sell. Now, once you click sell, it's going to bring, well, terms and conditions, and click accept. And there we go. So before I click sell, I do have a figure in between here. You guys can see the 0.01. Now that's called a lot size. Now a lot size is more of a unit, right? A unit of how you can measure, say, a currency. So you can say, well, I'm going to buy one lot of Euro USD, or I'm going to buy 0.01 lots of Euro USD. Now, the bigger the lot size, the bigger the risk. And by the way, if your capital is too less, sometimes the broker won't even allow you to open up a trade with a given lot size. So in this example, say we start off with 0.01. So we're going to go ahead and experiment with 0.01 and then 1, and then we shall see the difference. So I'm just going to go ahead and say click sell. Okay, so we do have those trades running, and then I can also go ahead and use 1 lot size, then click sell. Okay, so now we do have the trades running. Demo account 100k, it's MT5 from MetaQuotes, and now there we go. So you can see the difference is we have the first 2 trades of 0.01, and we are currently in a loss of negative $0.07, right? Then on the lot size of 1, we are currently in a loss of $9. You can see the difference. And by the way, even for more practice, let's go ahead and add a lot size of 10, then click sell, and there we go. So you can see that the bigger the lot size, the bigger the profit or loss. And mind you, once these trades get into profit, these first 2 trades are going to make just a very small profit, say $1 or $2 or $3. But for this trade of 1 lot, it could even make up to $100 or $200 or even $300. And then this one of 10 lots, it could even make up to $1,000 or even $500, depending. Now I know you'll be like, well, I guess I should be using bigger lot sizes, but remember I said the bigger the lot, the bigger the profit or loss, and the bigger the lot size, the bigger the risk. Okay, so it's way better that you keep your risk minimal by using smaller lots, so you're able to manage your account in the long run. So an example is, if I'm trading off, say with an account of $100, I'm going to use, say, a lot size of 0.01. In that position, I'm going to make from $1 to $2 or $3, maximum $5 on a single trade, right? Then if, say, I'm using an account of $1,000, I could use a lot size of about, say, 0.1, 0.2, maximum 0.3, and in that case I could be able to make up to $40 or $50, and on a good day even $80, right? That being about 8% of the account. So it's very important that you keep your lot size minimal as compared to your trading account, and there is a very easy way of doing that. You can go ahead and come to your app store and search out for forex calculator, and there we go. So we do have a list of them. We shall just go ahead and choose one. This looks good. Let's see. At this point, I don't choose a calculator because I'm very used. I know, well, I'm trading off with an account of 10k. This is what I should do and this is what I shouldn't do. But for this example, let's go ahead and give it a try. So let's go ahead and open this, and here we go. So we do have the account currency, and our trading account currently is in USD. We can all see that. So that's it. Then which trade are we trading? We are currently trading Euro USD. So I'll just come over here and choose Euro USD. And then the trade size, we are using a standard lot. So let's just go ahead and click that. Then the leverage. Now, in this example, we need to see what the leverage is on this account. And by the way, on choosing the leverage, it's more often on the broker. When you are signing up with a broker, you do have those options. Say choose 1 to 1 or 1 to 10 or 1 to 1,000. Again, I described that in the previous video. But again, the bigger the leverage, the bigger the risk. Okay, so in this example, we shall assume that this account is 1 to 10. So let's just go ahead and choose 1 to 10. Okay, and then let's go ahead and click done. Okay, so now the position size, so account balance is currently 100k. Okay, then the risk amount, I say intend to risk $1,000. Oops, rather 1% on each trade, that means I am risking $1,000. Now in trading, we do have a rule that says risk 1 to 2% of your trading account. And that's why I was emphasizing the fact that if you are trading off, say with an account of say $100, use 0.01 so you can keep your risk minimal. Then we also have what we call the stop loss, as we are going to see. So well, I could say my stop loss is 20 pips, and I'm going to go ahead and calculate that, and there we go. So now the standard lot that I'm going to use is 5. Then minimum lots I would use 50, but in this case we're going to consider the standard because that's what we chose. And that means right over here I could be able to use a lot size of up to 5 for this particular account, and then can actually even check out more. Okay, so generally if we are using a lot size of 5, right, with a stop loss of 20 pips, we are generally risking 1% of this account. Okay, so once you have your trades open, the next thing that you would have to do is to set your stop loss and take profit. Now, by the way, this can either be done before opening up the trade or after opening up a trade. Now, considering 2 factors, it does depend on what your preference is, but I would say, well, once you have opened up your trade, you should know where exactly to place your stop loss, and even before opening up your trade, you should have it in mind. Now, in this particular example, let's just go ahead and set a stop loss just by default. So right in over here, we have opened up a sell on Euro USD, and this is how we look like. Now, opening up a sell, that means we expect the price to come down, right? But what if it goes against us, right? And that's why we must place a stop loss. So in this case, I'm just going to place my stop loss above this point where we opened up a trade. You can see we opened up a trade around here. So I'm just going to place my stop loss right around here. So that's going to be 0.96, actually 1.09640. So I'll just read 9640. So come over here, click on the pen, and then stop loss. So it's 9640. All right, so that's the stop loss, and click modify, and there we go. So now you can see that we do have a stop loss set, right? You guys can see that dotted line right over here. Let's just go ahead and highlight it. So you can see that dotted line. Now that means if in any case the trade goes against us, then we would be stopped out, or the trade is going to close off automatically, and then we shall find the trade closed. So that keeps your risk minimal, because I mean, it's not a must that you must keep watching the charts 24 hours. No, once you have your trade, place your stop loss and the other one called the take profit, so you have your trades running. So right in over here, we can also go ahead and set a take profit. So I'm just going to go ahead and drag this tool to find a take profit. Remember, a take profit is the opposite of your stop loss. For a take profit, it's going to close off your trade once it gets into profit. So in this particular example, the fact that we opened up sales, we expect the price to go down, right? To keep going down. So in this case, I would say, well, let me place my my take profit right around here. So this is going to be 1.09295. So 92.92. So let me just come over here, take profit. So 92.92. I would even copy it, and there we go. So now we do have 2 set. So we have a stop loss and take profit. By the way, be sure that you copy and paste these on all trades. Having them pasted on all trades means all your trades are secured, right? If it does hit your take profit, better off. It's not a must that you must keep watching your charts, okay? So once you have the stop loss and take profit set, that means you have put the risk management tools. And by the way, that's where the principle of 1 to 2 or 1 to 3 comes in. Risk to reward ratio, right? You are risking 1 to make 2. Now in this example, say if we say our stop loss is about 6 pips, then our take profit should be at least 12 pips, meaning in that case we are risking 6 to make 12. In other words, you could say we are risking 1 to make 2 because 12 divided by 6 is 2. That's a very important thing. So for any trader, you must be able to set your stop loss and take profit because it's a must in trading. If not, then you are literally gambling, which is not a good thing. So once you do have your trades running, here's how you can actually close them off. So say you are in profits and you want to close them off, and maybe you don't want to hold until your take profit or your stop loss is hit. You're just going to come over here to your trades and drag this tool right here, or scroll to the left, and then you have this tick. So right here you can say close this trade with a loss of say $8, or let's close off this biggest one. So come over here and close better. So once you have it closed, then it's no longer going to appear in the section of trades. It's rather going to come over to history. So right over here you can see the balance now is -30, meaning we took a loss on EURUSD. Well, if it's profit, then it's going to reflect as profits. And by the way, once you even make your withdrawal, it's going to show up right over here as a withdrawal. And by the way, since you are still watching up to this point, I do have a very special offer for you. So we do have a discount running on the Forex Bulls Academy. Well, it's generally a beginner to an advanced course. You get to learn all the basics of trading in detail, and furthermore you even get the trading strategies. And we also have weekly Zoom sessions with myself and 3 other mentors, and trust me, that's amazing. And more to that, we have an exclusive student community of other traders that you can actually be part of. Now the whole academy goes for over $300, but for your case you are going to get access at just a discount. So go ahead, click the link just down. It's going to be limited to only 10 new students, so you're going to get access for only $70. It's going to be the first link just down in the description. Go ahead, click that, and let's meet in the inner circle. Back to the video. So I do believe you now know how to open up a trade, so you can do as much practice as possible. Go ahead, use your demo account because I said it's free, so you can do as much practice as possible. And once you're good with that, you can just shift the same knowledge to your real account. For your real account, it's just slightly different with the fact that you deposit real money, so you're able to make real money. And that's so easy. You can actually go ahead, use the trading broker that I use. I'm also going to put the link just down, but on the other side you can choose any. Just make a lot of research on Google and find out a trusted broker. It must be regulated. So to get a trading strategy, I'm going to put the video just right over here.